What is up, guys? My name is Rose. I am one of the group members in the forex Clearly group by Todd. And today I'm going to hop on here real quick to show you guys how I do my analysis. We're going to do two pairs today, Euro JPY and USD CAD. And I'm going to show you how I do my analysis from a institutional bank order flow view. I learned these concepts mainly from ICT. If you don't know who that is, ICT stands for the Inner Circle Trader, and he is a huge resource that many of the people in the group use. And he is somebody that you should seriously watch, because he took my trading to the next level, and he basically shows you how to understand the charts in a way that is not just looking at them and saying, oh, this candlestick is this, so this is going to happen, or oh, it's making this shape, so this must be happening next. Forex is a lot more complex than that. And if you want to do Forex and take it seriously and be able to trade in a way that is sustainable through market changes, then you need to learn these basic concepts. So first of all, let me just share my screen real quick and let's pull up the charts. Okay, so I'm on Euro JPY. And basically, if you're a beginner trader, you already know market direction is one of the easiest things to establish, right? And we can just zoom out here on the monthly. Notice I'm on the monthly. It's very important to have a zoomed out perspective, because when you're trading and you're stuck on the daily, the 4 hour, the 1 hour, and the 15 minute, there's going to be moves that are happening that as a beginner, you may not understand why they're happening, because they're going to break a high, but then it's going to continue, selling, or it's going to break a low and it's going to continue buying, and you're not going to understand why. So it's very important to keep a zoomed out perspective, because when these little moves are happening, you're going to be able to catch the moves instead of being confused, because you know the overall direction. So market direction is pretty basic, but it's huge. But you should always get your market direction analysis from a higher time frame. Todd even goes to the 2 month. Some people go even, higher up, 12 months, 6 months, based on what kind of trader you are. But for me, I just like to look at the monthly chart. So pretty much simple. We can see that price has been bullish. Price has been bullish, and we know that because obviously it's going in the upward direction. But more than that, we have a high, we have a low, we have a high, we have a low, we have a high, we have a low, and we have another high. So market direction here is easily bullish. We'll put on monthly. So another label that you can call the higher time frames is going to be the macro. So I'm going to label that there. So market direction is the first thing that you want to establish. So we established that it's already bullish. The macro is bullish. So that's the second thing that we're going to need to figure out, and this is where you catch your trades, is we are looking for the order flow. So the order flow is going to be the how. How price will reach its objectives and continue in overall direction. So the order flow, by knowing the order flow, this is where you're going to catch your trades. So the direction is where, and order flow is the how. So to start establishing what our order flow is, you can start on these high time frames, right? So on the monthly, I can see here it's bullish. We just created a new high, right? So what typically happens after we create a new high? Well, you can see here, price sold and it retraced, right? Then it goes up and buys again after it retraces and made a new high. Then it retraces again. And then it continues buying up. We have a new high right here. So basically, we can repeat that action. Forex is it's an algorithm. If you listen to ICT, Forex is based and moves on an algorithm that the institutional banks have established, and that is how they make their money. It's not about buy side volume or sell side volume, how many people are in the market. The amount of people that aren't banks in the market could never be enough to move the market. It's the banks that move the market. They are the ones with the overall money, and they're going to be the big powers in the market. So what we want to do is we want to figure out what they're doing, where they're going, and how we can follow them. So pretty much because we made a new high here, I can see that this candle is very bullish. And you can see when a candle engulfs another candle, its previous candle like this, we call that an order block. So basically, an order block is, I pretty much just call it a block of orders, right? This is a block right here where the bank said, okay, we're going to put in all these orders and we're going to move the market to the next level. So in order to do that, right, they still have orders here that are still pending and they're still open, because in Forex, it's an exchange, right? You can only buy what somebody is selling to you, and you can only sell what somebody is buying to you, right? So there's a whole bunch of orders right here that are still open from the banks. So we know that the banks are going to want to come back down and close out those orders. So they're going to want to retrace, just like they did in the past here, they did it here too. So an easy way to figure out where they're going to retrace to is you throw your Fibonacci on this candle right here. So when we have a bullish candle, we're going to want to put it on the bottom all the way to the top, and I like to do wick to wick. So the zones that we look for according to ICT is mainly this 0.78 right here. I like to do the 0.7, 0.78, and the 0.88, and I basically mark that as a zone, just like this. And ICT calls the 0.78 the optimal trade entry. So this is, I have that marked as a weekly, so we're going to go ahead and correct this to a monthly. Monthly, there we go. So this is the optimal trade entry zone. This is where the banks are going to get the most money back if they come back all the way down here and they can put new orders in to take it higher. The next zone that we like to look at is going to be the 50% right here. And the 0.618 is very significant as well. So what I like to do is I just combine these two, right? And I just mark it as a zone. And so I'm going to go here, I'm going to label this, and Todd Trademark has named this the golden zone, right? So I have my monthly golden zone marked and I have my monthly OTE zone marked. So these are levels that I'm looking at for price to come down to. The institutional banks could sell this down here. As you can see, they already have from the previous week's movements. And they could say, okay, that's enough for us. We're going to go back up. Or they could continue to sell down here and get more money and more orders back. So these are what we watch out for right here. So that's pretty simple. So because I know it wants to go higher, price needs to sell first, because the banks aren't going to keep pushing price higher unless they can get more money, unless they can get more orders. And they're going to have to go back down to where other orders are open in order to take them from other people and close out their old ones and continue higher. So let's exit out of this to clean up the chart. So another thing I want to point out right here is some people do like to box these order blocks. I used to do this myself because, it's just another zone that you can basically just use to track price. So the reason I don't do this anymore is because I just think the Fibonacci is a lot more accurate. If price was to sell past this OTE, to me, I can still see this order block here, and I know that it still has plenty of room to retrace before I would consider price possibly breaking to the downside. But that's pretty visual to me. If you need to mark this, you can. However, I do think the Fibonacci levels are a lot more accurate. So I'm just going to go ahead and delete that, but you can mark it if you want. So the next thing we're going to do, we have our direction, right? So price is going to sell. So we're looking for sells for this month. Okay. So that is our direction. So overall macro is bullish, but we need to retrace. So our direction for the next at least half of month or however long it takes to get here is going to be bearish. So let's drop down to the weekly. Okay. So like I just said, because the institutional banks want to go and get the most money for their, for their bang for their buck, I guess you could call it. It's the same thing here. So we have a bearish candle right here. And I know I'm just going to anticipate that they still want to sell into this OTE zone. There's also a gap right here. If you can see this, there's a gap right here. This is called a fair value gap. So basically, when price retraces and it doesn't retrace all the way, so you see these candle wicks don't meet each other, there's an opening right here, and that means that price never came back to close these orders. So we call that a fair value gap. So just like there's an order block that has orders open, fair value gaps are also areas that have orders open as well. So to me, this fair value gap right here, let's just label this real quick. So this fair value gap right here that you can see price has very slightly sold into, but there's still a gap. If you just go from this way, there's still orders open right here in this body. So this fair value gap right here, and there's an OTE right here, that's giving me more confluence that price is going to want to continue selling. So I'm just going to anticipate that we're going to continue to be bearish for the next maybe week, maybe 2 weeks. I'm not sure how long it's going to take to get here, but I'm just going to anticipate that price is going to keep selling. We also have bearish candles. So it's the same thing. So like I said, on the monthly, if price wants to keep buying, what are they going to do? They're going to go back down and grab more orders so they can continue buying. So it's the same thing here. We have this bearish candle right here. And in order for the banks to want to keep selling it, I can bet you $1 million that they're going to want to take price back up to these zones, close out the orders they have open, grab other people's orders in the market, and then take it down so they can make more money, right? So I'm just going to do the exact same thing. I'm going to mark the golden zone. Oops, golden zone right there. And then I'm going to mark the weekly optimal trade entry. So we can go ahead and delete this fib. So it's pretty simple, right? I just did the same thing twice. Forex, the markets are fractal. They do the same thing over and over and over again. They might have a slightly different appearance, but that's not going to matter to us because we know what to track, right? So now that we have this marked up, we can see that the overall direction, it wants to sell here. We have confluence that it wants to continue selling. In order to do that, it's going to want to retrace to put more orders in, right? So we have these marked. So this is going to be a simple buy to sell, right? Okay. And so before I leave the weekly, you can see that there is relative equal lows. They're not exactly equal, but they're relative, right? This is going to be an area of liquidity. So basically, according to ICT, this is liquidity because the retail world and everybody else who trades besides the banks is probably going to have a very high chance of buying and selling at support and resistance. So this is going to be a level of support to the retail trader, right? So let's just zoom in real quick to the daily. So here, these relative equal lows, there's liquidity line here because to the retail trader, this is an area of support. And support, if you're a retail trader, you're going to buy at support and sell at resistance, right? So there's a whole bunch of buy orders sitting right here, and their stop losses are going to be somewhere in here, right? So according to ICT, price is going to want to grab other orders before it goes in a certain direction, right? So we can see how the candle wicked right here and it just stopped out all these people and took their orders. So now the institutions are probably satisfied. So by this wick, and you can see how it came down sold and already rejected, by this wick, we can tell and this gives us a hint as when the market is going to start buying. So we can possibly capitalize on this buy movement before it starts selling. Or you can just wait. If this is too much of a risky trade for you, you can just wait till price comes up in this area and then sell it down. But if you want to try to get on this buy, ICT says that you should wait for a grab on liquidity. So you see how price came down here and grabbed this? That liquidity was grabbed. So to me, that's what I like to see. And after that, I'm going to look for a break of structure on the lower time frame to possibly capitalize on this buy. So pretty much that is like my analysis for, I don't really drop to lower time frames for analysis unless I'm just marking other points of liquidity. It's pretty self-explanatory here on like the daily and the weekly, and the liquidity that I would have marked is already grabbed. So liquidity is just going to be another objective that we get to mark that's going to help us establish the order flow. So again, I just want to zoom out. Price is bullish on the macro and it needs to retrace so it can continue going up. So bullish on the macro, bearish on the next level down macro. I mean, you could say it's the weekly macro versus the monthly. So on the weekly, we're bearish, right? And so the order flow of this is we're going to get a buy to sell. So that is the how it's going to get to the zone. It's going to buy first and then continue to sell. So if price before last week ended didn't come this low, let's say it just sold to here first, and at market open, everybody's trying to look to get in on a buy, I would say no, you need to wait. So that would be another way to establish this order flow, is instead of me just saying, okay, it dipped here, now I'm going to look for a buy and then a sell. If it hadn't done that, I would say, let's wait for a sell and then a buy and then a sell. So that's order flow. That's the how. So it's getting to here by buying, selling, or it could do other things like I just mentioned. So let me just drop down to the 4 hour just in case I'm missing anything. So yeah, this is beautiful. This is healthy right here for sure. This is really good. That's what you want to see. Okay, so let's just mark this too. It's gonna look better on the 1 hour. Okay, so let's just mark this as well. So earlier when I marked this fair value gap and I marked this OTE zone, I said those were both confluences for price to continue selling. But we do know that there is going to be a buy to retest the last bullish or bearish candle. And this is another spot of liquidity. So this would be a confluence that is helping me confirm my bias that price is going to buy up into these zones, right? Because there's other orders. This is trend line liquidity. On a lower time frame, even this hour, right? This is a range or a trend, right? It's trending downward, right? So retail traders would be putting their sell orders somewhere right in here, and their stop losses somewhere up in this zone, right? So I can see that even though the banks are probably already going to want to go up here to close out these orders and continue selling down, now there's a whole bunch of other players in the market that they can also take their orders to and have even more for themselves. So this is confluence that price is going to retrace to at least the 50% level. So from here, this is kind of a really short distance, so I wouldn't necessarily trade that. You can by zooming into smaller time frames. But yeah, so that is just my analysis. So overall analysis on Euro JPY is going to be a buy to sell. And this is on replay. So let's actually just watch what happened. Oopsie. Oopsie, I don't even know how to work this. Let's take this back. Okay, so we're just gonna get out of replay. So yeah, so I had this replay back to Sunday night. So it is now Monday and it is 9:15 p.m. over in California. And as you can see, price did buy up and it's sitting in that golden zone. Okay. So analysis has definitely been doing its thing. So let's go and do USD CAD. So USD CAD, let's go back to the month. Okay. So USD CAD, you can see we're going to start on the month again. It's been also bullish, right? Let's see. Got relative equal highs here. So let's mark this liquidity right here. So this is a higher time frame point of liquidity. So price is likely going to be moving a lot before it moves to take something like this. But I just like to mark it just in case price starts moving in crazy ways, and then I can zoom out and be like, oh, that's why. But overall, price has been bullish as well. We can see that this last bullish move right here, let's go ahead and fib this just like we did the last time. So price is retracing to this, it hit the 0.68. So price has been retracing because as you can see, like I mentioned before, if we take these candles away, this extremely bullish move had left a huge gap. See, from this wick all the way up to here, even from this all the way up to here, left a ginormous gap, which is open orders. So price is going to want to sell back down to close those orders. And we'll take this off. So fib, I just fibbed that as a frame of reference because I'm thinking, is it going to continue retracing or is it going to continue going up? So this one is a little bit more complex. If you see this order block right here, it's just like, it's really easy when you have these order blocks, but we didn't have that one last month. So basically you can still fib a candle that looks like this. So let's just pretend this is May 1st. This is what I did on May 1st. I fibbed this bullish candle. It's bullish, so we go from top or bottom to top. And as you can see, to date today, price has retraced pretty low here. And it may come back up before it sells. So in order to figure that out, because these candles and the structure is a little bit more confusing, we're going to need to zoom in. But we know it's retracing. So we know it's been falling, right? So it may continue falling or it may just go back up. So we're going to need to zoom in to the lower time frames. So let's go to the week. So, so this gives us more information, right? Let's go ahead and delete this film. Come on, get out of here, Zoom. Can't see Zoom. Okay, we're just gonna do this. Okay, so we have a bullish weekly order block. I'm gonna replay this, get that out of the way. So we've got a bullish order block, right? So it's the exact same thing. So we're gonna fib this. And because price is bullish here, we're just going to anticipate that it's going to continue bullish. Okay, so we're going to fib this. And this is a little sticky because I know you guys see this bearish bullish order block that it's buying into, right? That it bought into last week. So this is a little sticky. So we can say that because my price may buy into this to sell down, we like the sell because we can see confluence that it may sell as continue selling down. But you only want to stay in this for probably just to these zones, because as you can see, we have a bullish order block and we have a bearish order block. So price could really go either way. So it's going to be the safest to just sell to these golden zones, at least golden zone OTE. That's what I would do just to be safe. Or there's always other pairs you can trade, which is the beauty of forex if you're not too sure about the market direction. So now that we have that marked, we're going to be looking for a sell, right? Some might be ballsy enough to get the sell to buy. I would probably, depending on what it looks like at that point, just leave it alone. Why? Because there's liquidity right here. So this is higher time frame liquidity as well, right? So like I said, this is trend line liquidity. We have low, higher low, higher low. So the retail traders are going to be setting their buy orders right here, and their stop losses are going to be right there. And because we know the banks like to trick people, you could be buying here and then it just smashes through, grabs these orders, and then continues up. You don't want to be that person. So you should just stay in down to these zones where we know that price has repetition and moves and does every week, every day, every month. It does the exact same thing. So this is a safe move right here. So this liquidity we have, I want to just bring your attention to this little fair value gap right here. So like I mentioned earlier, price never came back to close these orders. So this is a gap, and we also have an order block. We have another weekly order block right here that was never mitigated. The price never came back down to close these orders. So from my point of view, in order for price to continue bullish, the banks are probably going to want to take it down here, maybe to here, or down here somewhere. Why? One, they get to grab all of these stop losses. Two, they get to close these orders here. And three, they get to close these orders here. That's a lot of orders that they then get to take to the upside and make and cash out, make millions and billions, trillions. That's a lot. So it's very important to have these areas marked because it's just manipulation, right? The retail trader would look at this and say, oh, this is a flag, right? This is a flag. It's a bullish flag. That means when it breaks structure right here, that means that it's going to keep going up and I should get in for the buy. That's absolutely incorrect. It may work sometimes, but it's just not a sustainable way to trade. You need to be able to see things like this because you're going to get your account blown if you just see a shape on a chart and you are just getting in because of that. That's not enough confluence to establish a trade entry. So now that we have these marked, we're going to be mindful. We're going to be mindful that there's going to be manipulation that's going to occur. There's a chance it might not occur, but I'm just going to bet that it will at some point in time. I don't know when, but at some point in time. However, we can zoom into the lower time frames to try and see when that could be. Right now we're in the mid-month. So usually price will retrace until like mid-month, maybe like 3/4 of the way through, and then it will start moving in the direction it wants to go. But that's not always a guarantee. So here, as you can see, price never came back down or retrace this. This is another fair value gap right here. So I will just mark this. There's another fair value gap. Make it a different color. Fair value gap here, weekly golden zones and OTE here, which is the bank's favorite zones. And we have a daily order block that has not been mitigated. That is 3 confluences, guys. Just like there's 3 confluences here, liquidity, gap, order block. There's 3 here, gap, retracement zones, order block. So I'm going to bet money that price is going to sell into these zones. And you can capitalize off those zones. So I want to zoom in really quickly just to make sure I'm not missing any other points of liquidity that could get grabbed, because if you could be entering in a buy right here and price wicks up this way and stops you out, and then it sells and you're like, what the heck? I was right, but it stopped me out anyway. What's going on? Well, that's because there is liquidity right here as well. You can see trend line liquidity. We're just going to mark this one too. So liquidity here. And liquidity here. So we've got orders resting here, orders resting here. Retailers are expecting price to come up here and then sell once it reaches this area of resistance. So the order flow of USD CAD for this week we know it's going to sell. Okay. The order flow may be this. It may come up here. It may grab this. It may come up here and only go to this wick right here, because I can see this is another fair value gap, right, to this wick. So I'm just going to draw a line here so you can see it. So we're going to say daily. I'm just going to say fair value gap. Top of fair value gap. Okay. So here, top of fair value gap, right? Because price never came and retraced this. So there's open orders that the institutions want to close. There's stop losses resting here. So these are orders that the banks want to go back and take from other people. So the order flow could be this. Price can open at the market and it could come here. It could be satisfied with that amount of orders at close, and then it could sell to our zones. Or price could come here, grab all these people's orders right here, and then be satisfied and sell to our zones. Another area of liquidity that I see, and I'm just going to delete this just so I can have this, is this right here. So this is equal lows, right? So these are equal lows right here. And there's a fair value gap right here. So another option of order flow could be that price just sells, because there is reason for it just to sell without taking these orders, right? Because it can grab this liquidity, it can close these orders, and then it could bounce in our zones right here. So depending on what it does first, that's going to help you be able to time your entries and know when to get into the market. So sometimes you just got to let it play out when there's 3 different variations that could possibly happen. You guys saw on Euro JPY that price before the market closed on Friday already grabbed this liquidity, right? So we already can kind of anticipate that it's going to go up and be satisfied with grabbing those orders, right? And it's sold into this fair value gap. It's already satisfied that. So we can anticipate that it's just going to continue buying. But on USD CAD, we don't have that confirmation yet, right? Okay, so this is a replay. Let me just take it back. Sunday, Friday. Yeah, so we don't have that confirmation yet. So you might want to let it play out on Sunday. You might want to let it play out on Monday too, and just see what happens first. But I can bet you $100 that it's going to go here no matter what. So just be patient. Let price show you what its hand is. If price just skips and goes down, then we're probably going to get a ginormous swing up to grab all of the stuff that left here. If price goes up here and grabs this first, then I could possibly anticipate it and being comfortable with it selling all the way down to where its long-term objective is, which is down here. So that's order flow, right? So we have 3 options of order flow right here. We've got straight down, we've got above the highs, then down, and then we have to this fair value gap and then down. So that is the how, right? So this is so you're not confused. Like if it was to come up here and break these highs and then sell, you're not going to be confused, because you know that it just grabbed this liquidity. You know that it was just an order flow that it had to complete before it continues going where it's actually going. And in the retail world, they will tell you, oh, it broke this high, it's going to continue buying, it's going to continue buying. That's not necessarily true. It might do that, but it's just, you know that there's orders down here that if it really was to go that high, you as a trader know it's going to want to come down first in order to have that healthy price action, right? So that is my analysis for USD CAD. Let's just fast forward and see what has been happening. Okay, so that is the option that it chose. It chose to just go straight down. So it looks like it's heading for the golden zone. Let's see, higher time frame here. Yep, and it formed a daily bearish order block. So this wasn't really supposed to do live trading, but for you beginner traders, all you gotta do, I can't see where this wick is right now. Let's get this out of the way. Okay, there it is. Okay, so we got the chart showed its hand, right? It went down and just grabbed this, and it looks like it just wants to continue selling. Why? Because we have a daily bearish order block now, and we have more structure to help us figure out the direction. So what are we going to do, traders? We're going to take our fib and we're going to fib it. And if you were to wait until price comes to a retracement of this golden zone or this OTE, you could get in on a very good sell down to these zones right here. So that, ladies and gentlemen, is order flow. That is how I do my analysis. If you have any questions at all, please reach out to me in the group chat. My name is RoseBud24. You already know I'm there every morning. So if you ever have any questions or need help with analysis, please feel free to reach out. I would love to help you understand the markets more and just do what I can to help clarify forex for you, because forex is truly a blessing given by God. And I genuinely want everybody to be successful. So I will catch you guys in the chats. Okay.